Hi, I'm Sam Scheitler from Clark Mortgages. I specialise in more complex mortgages. I wanted to discuss the mortgage timeline of the process. You've found a property or you're just looking into getting into property. What can you expect start to finish a mortgage application and a property search to look like? Well, first off, I always say get on with your agreement in principle. So that's going to involve dealing with your bank, dealing with your mortgage broker, whoever it is you're going to want to deal with. Get an initial consultation, speak to them. If it's a bank, generally they'll give you the agreement in principle on the phone because there are much fewer checks in terms of eligibility. They rely on the information you give them. If it's a broker, they'll take the details and they may look to justify that with documents. Some brokers will just do an agreement in principle similar to a bank. I don't generally rely on information customers give me, not because people lie, but some people just genuinely don't know what they don't know, particularly on my side of the fence where I'm dealing with complex mortgages. So I'm dealing with self-employed people who might have complex income structures. We may need to look at a case in various different ways, credit history issues. There are a variety of reasons. Either way, we go with documents and then we get an agreement in principle. The benefit to that, I find, is that you can rely truly on an agreement in principle. You're not going to get the rug pulled from under you because you've had the research done already. However you go about it, you get an agreement in principle, you go and find a property. You do a property search, that goes for however long it might be. An agreement in principle is usually going to be valid for between 1 and 3 months, depending on the lender. Most of the time, it doesn't take too much to refresh that if time does spill over anyway. That all happens, you then have found the property. You go to your estate agent or whoever's selling the property, you say, I want to buy that property, deal agreed. You prove your funds by way of your proof of deposit, however that is being financed, and your agreement in principle financing the rest of the mortgage. That then leads to what's called a memorandum of sale being issued. That's kind of the initial terms that the contracts are based upon, which is a solicitor matter. Anyway, solicitors are instructed and we're instructed to go towards putting a full application in. The full application goes in and there are basically only 2 components to a mortgage application. People talk about everything in between. Ultimately what it is are you a suitable applicant for the lender's purposes, and is the property a suitable security for them to lend against? And there are 2 professionals involved that deal with that. The lender instructs the surveyor to deal with the property. They look at, is it worth what it's worth, and are there any major issues that we should know about to deal with? That's all that takes. The underwriting process comes down to a number of different things. It depends really what your profile is. If the case is affordability, well, they're going to look at how do you glean your income from wherever you go. Are you employed? Are you self-employed? Are you a sole trader? Are you a limited company? Whichever way a lender assesses you, they're going to look at how are you getting your income, how are you spending your money, credit commitments, so on and so forth. Is the mortgage affordable? Does your credit situation justify whether we should lend you the money? The royal we being the bank. Anyway, so the valuation happens. The underwriter says, yep, that all ticks. It is what it said on the application. It is pretty much just an interpretation of, does the application match what the documents say? If the answer is yes, and if there's no other secondary, tertiary checks that are done by the lender in the background that result in any further explanation, links to associated people, for instance, that then takes you to the offer. The offer is a binding commitment from the lender that, subject to no changes between them issuing the offer and completion, they have put that money aside for you, basically. That goes out to you, it goes out to us, it goes out to the solicitor, and the solicitor takes you forward. The solicitor then deals with what we call inquiries, searches, that kind of thing. From there, you go on to exchange, you go on to completion. Timeline-wise, an agreement in principle should take you no more than 2 days to get. In our case, sometimes it takes a bit longer, just depending on how long it takes you to get us the documents. A full application It depends on the lender. Generally, I find that high street lenders rely more on automated searches, less on personalised underwriting. The reason for that being they deal in such a high volume of applications that it just makes life a lot easier. As a result, you'll often find that they have a much more defined criteria and a smaller portion of clients that they would accept as a lender. You know, they have very defined rules on who they would accept, on customer profiles, basically. So you find because of that defined criteria, they will achieve a mortgage offer much quicker because their application process is much more defined. Whereas a more complex mortgage lender who's dealing with perhaps complex income streams, perhaps they're working off the net profits of a business, so they have to go for an accountant's reference. Perhaps you've got bad credit issues in the past that need explaining, that need a human to check through it and sense check, and any human related issue is going to ultimately drag out the process, is going to rely on less automation and more when I have chance to do it, so that'll extend it. So I generally find that we'll get a client signed off with a high street lender in about a week. With a more specialist lender, it really can depend, but generally I would say no longer than 3 weeks for a typical case, unless you're dealing with the really, really complex fringes of the market. And then generally speaking, a completion nowadays, they say the average completion is 4 months, which I think is probably a stilted view of the market. I still find that a competent solicitor involved and a competent vendor solicitor and motivated parties involved mean everyone gets their documents in on time and mortgage completions go through in 2 to 3 months like they used to. But really it relies on, there are so many people involved, you're relying on so many different people to do their things on time. An extra 2 days at every step of what is probably, you know, several hundred steps in the entire process is going to delay you. So you need to rely on people, in my view, who are going to get things done quickly. The reality is, if you don't get things done quick, everything starts to dissipate. People start to fray, and that's where deals start to fall through. So do everything on your side as quickly as you can, get your documents in on time, and you're going to have done everything you can to get your completion through as quickly as possible.